So the AI chip shortage is real, very much true. So NVIDIA can't make H100s or B200s fast enough, and most of them that are currently built and shipped by NVIDIA, they go straight into the hands of big tech. You know, renting an H100 cluster right now, a cluster is like 8 machines into one server. On Amazon Web Services, one of those clusters is costing you around $80,000 a month. But that's a lot of money. Most startups or even mid-sized companies simply can't afford that. Together with having a decentralized model with token incentives, but also some own proprietary technology that makes the GPU utilization rate a lot higher, we can offer our services up to 90% less price than Amazon Web Services or Azure for the same GPU capacity.
The cost of cloud computing is skyrocketing. GPUs are nearly impossible to get, and businesses are desperate for alternatives. I spoke with Dion from Planck Network about how they're tackling both problems head on. From deploying 60 million worth of enterprise GPUs and generating 1.5 million in revenue this year, to building the world's first layer 0 for AI and DePIN, a compute native layer 1 and an ecosystem powered by the Planck token. This was a fascinating look at the future of decentralized AI. And before we get started, I just want to give a huge thanks to Planck for sponsoring this incredible interview.
That's dope.
Maybe we should start with a quick TLDR of exactly what you're building and what Planck is so that we can set the table for the audience.
Yes, awesome. Yeah, so my name is Dion, I'm the CEO of Planck, and what we're building here is a complete AI computing stack that serves Web3 protocols with our newest edition of Planck 0, which is the first layer 0 for AI and DePIN, and then our own layer 1 blockchain, which is called PlanckOne, which completely powers our AI computing stack. And our AI computing stack itself, which is our AI cloud and our AI studio, which we mostly currently serve in Web 2. So that's what we're building here. We're building something, a technology that allows Web 2 to quickly and at lower prices build and scale AI. And in the Web 3, we're really trying to bring the AI and DePIN space to the next level with Planck 0.
So it's interesting. We've talked about decentralized cloud for a long time in the ways that crypto certainly could help with that. But I think we have this sort of dual problem, right? We have the high cost of cloud computing from giants who I assume are dominated by Amazon and Google. But then in the past, I think the smaller decentralized networks, people have worried a lot about reliability.
Yes.
So I'm assuming you're trying to thread the needle between those two things.
Yes, exactly. Yeah, that's, currently you have two choices, either hyperscalers like Amazon Web Services and Google Cloud and Microsoft Azure. It's just a big cloud. It's just a fancy word. The word hyperscale is just a fancy word for the clouds that are currently dominating. So you either have that option as an AI company if you're building today, or some smaller decentralized projects that try to rent GPUs from consumer devices. And the first option, hyperscalers, are the most reliable right now. They have reliability with uptime, with actually anything that enterprises need, but the costs are very high. Renting an H100 cluster right now, a cluster is like 8 machines into one server, packed up into one server. On Amazon Web Services, one of those clusters is costing you around $80,000 a month, depending a bit on the region though. But that's a lot of money. Most startups or even mid-sized companies simply can't afford that. So it locks in innovation into the hands of the biggest players with the most funding. Then on the other side, the problem with decentralized networks is they have tried to tackle this previous problem with hyperscalers by trying to onboard consumer devices. With what I mean with that is let's say a GPU model called the 3090, the NVIDIA 3090. It sits in someone's gaming PC. They are not reliable enough. They don't have the bandwidth, the uptime or the compliance to convince enterprises to take them just because the prices are far lower than those hyperscalers. So, you wouldn't trust them to power your medical AI application or your financial simulations. You can't just do that on a consumer device. So what we're trying to do here is, yes, we're trying to merge these two worlds. We currently have deployed more than $60 million of enterprise grade GPUs like H100s, H200s, and Blackwell B200s, the newly introduced NVIDIA GPU. And they're all deployed inside tier 3 and tier 4 data centers. Tier 3 and tier 4 data centers are the highest standard data centers in the world. So you're literally having your GPUs in similar data centers as Amazon Web Services and Google Cloud. But because we run it through a decentralized model with token incentives, we can cut the cost dramatically. So together with having a decentralized model with token incentives, but also some own proprietary technology that makes the GPU utilization rate a lot higher via hot swapping, for example, we can offer our services up to 90% less price than Amazon Web Services or Azure for the same GPU capacity. So that's the result of the platform, trusted at the enterprise level, but also affordable at the startup level.
And you've already generated, I think, 1.5 million in revenue.
Yes.
Is that accurate?
Yes, that is accurate, up to date. Yes. It's true.
And you've deployed more than 60 million worth of enterprise GPUs, it says here. So
yeah, so far.
Yes, then how are you positioned to capture even more demand as we get this AI chip shortage? I mean, these AI chips have been the entire narrative of late. The United States taking a 10% stake in Intel, everything happening with NVIDIA and what's going to be available in China and what's being built in China. So this is really one of the hottest topics in international news right now.
Yes. Yeah, so the AI chip shortage is real, very much true. So NVIDIA can't make H100s or B200s fast enough, and most of them that are currently built and shipped by NVIDIA, they go straight into the hands of big tech. So if you're a small AI startup today, even if you raised money, it's almost impossible to access these GPUs at fair prices. You're either priced out or stuck on long waiting lists. We have seen it ourselves as well. We see that in most regions, Microsoft Azure doesn't even have one chip available. You need to rent immediately 8 chips, which increase the price from 10,000 a month to 80,000 a month for one H100. And you just want to do some testing on these machines. Then that's just really too much. So that's where Planck has been able to step in. We've already secured racks of these GPUs via the partnerships that we have with, for example, Brock Pierce, the co-founder of Tether. He's really into GPUs right now. He has a lot of these GPUs. He can get them at good prices because also he doesn't order hundreds of thousands of them at the same time. So if you are somewhere at the level that you are not buying too less of these GPUs, but are also not buying too much, you can get your hands on them. So by partnering with tier 3 and tier 4 data centers that are relatively smaller than the Amazons, than the Microsofts, we have generated an infrastructure footprint that can actually deliver compute when others are bottlenecked. So that's why we've already crossed 1.5 million in revenue this year from real clients in the AI and high performance compute space. So I think just the model that we have, it's the decentralized model. It has an incentive structure that is very attractive for GPU providers. Because of that, providers can monetize their GPUs beyond just traditional contracts.
Yeah, so I definitely understand the use case. I want to dig more into how you actually do it. Because as I said, there's been kind of a lot of players on both sides, and you have a unique approach. We spoke about this on Spaces, and I found it fascinating. So first you have a layer 0 for AI and DeepIn, and I think most people don't know what layer 0 means, but that's not necessarily a new concept. But you also have your own layer 1, which is the compute native layer 1, right? And so maybe you can break down how those two are different, how they play together to solve all of these problems.
Absolutely. And this is one of the most important distinctions about our architecture. It's like you have PlanckOne and Planck0. So what is actually PlanckOne and Planck0, right? So you already mentioned it. PlanckOne is our compute native layer 1 blockchain that currently only hosts or has locked in enterprise grade GPUs. So in the future, we're also doing retail grade GPUs, but so far that hasn't worked for us in monetizing it. So currently we just stick to what technology currently makes possible, which is for us monetizing enterprise grade GPUs. So Think of this layer one as an execution environment. So it's where all the real AI workloads are being processed. So if you are an AI startup that is currently using our AI cloud, which we hopefully will dive in a little bit later, then our layer one blockchain called PlanckOne is currently processing these AI workloads. That's how you call it. So it's where companies rent GPUs. So they don't feel that they are using a blockchain, but they are actually using it. That's very important for adoption. So,
very, very important, because the minute we have to start explaining to people the tech and they have to become familiar with the vernacular, we've completely lost them.
Yeah, exactly. So that's, we will come to the AI cloud later. That's literally the front end of this blockchain. PlanckOne is where where all companies rent GPUs. It's where inference happens. It's where models are trained. PlanckOne is the backbone of our AI cloud and our AI studio. It's the environment that enterprises interact with without knowing it. So that's PlanckOne. And then under the hood of that comes Planck Zero. So it will launch after our TGE for sure. It will launch probably at Q1 of 2026. But this is really our breakthrough technology in Web3, because a layer one, especially in GPU native layer one, is not really a breakthrough. It just it's necessary for the stack that we have built. But Planck Zero is therefore really a breakthrough. It's like we talked to you in the space, it's the world's first layer zero designed specifically for AI and deep in ecosystems, and it's basically the base layer that sits under these layer ones. So its role is not to execute AI workloads itself, but to connect multiple layer ones. So whether that's PlanckOne or other AI native chains that want to launch inside the Planck Zero ecosystem, Planck Zero provides them with shared security, instant token interoperability, and something we call compute interoperability, which is quite a new term in Web3 right now. So what that means is if one chain in the Planck Zero ecosystem has an excess of GPU capacity, another chain can tap into that within seconds. So it turns compute into a shared, composable resource across the ecosystem. So that's fundamentally different than IO.net or Aether. Those are really big GPU native crypto projects, and it's really different from what they do, because what they do is actually they silo compute into one ecosystem. So that's not good for the provider. That's not good for the compute provider, but it's also not good for the general deep in space, because if such an ecosystem all of a sudden sees a lot of their demand flow out, then the supply is sort of locked in there for a while. So in Planck Zero model, compute is interoperable, on demand, and tokenized. So whether you're running on PlanckOne or some future layer one in our ecosystem that's building on Planck Zero, you are never locking GPUs into one single pool. So you're basically getting part of a shared ecosystem where these GPU or those compute resources flow freely. So together, PlanckOne and Planck Zero make up our stack of decentralized AI, decentralized compute. So, yeah.
So the layer one is effectively just one of the pillars that will be built on the layer zero. Other people will also be able to build on the layer zero, and all of those will be able to share compute throughout the layer one.
Yes.
Basically, it's this base level for all of these other verticals.
Yes. And PlanckOne is already built. It's just waiting to get relaunched onto Planck Zero. So we launched testnets, of course. We're launching the mainnet after TGE, but then when Planck Zero testnet and mainnet has been successfully launched, then PlanckOne is getting a new home base, you could say. Yes.
So you keep mentioning the Planck AI Cloud. I know you have the Planck AI Studio and the Planck AI Cloud. Who basically uses those, and how are they different?
Yeah, so our AI cloud is they basically serve two different types of needs. And what I've been always pitching is they serve two different types of life cycles of a company, but they're built to complement each other. So our flagship is our AI cloud. It's an infrastructure as a service platform. It's designed for companies who need GPU compute, so they can spin up virtual machines, they can rent bare metal GPUs, or even entire clusters of H100s. They can build their own clusters, so they can pick how many GPUs they want. They can spin up a cluster and have everything neat into one cluster. But it also includes enterprise-grade features that are very necessary, that are companies currently using on Amazon Web Services, Microsoft Azure, Google Cloud. And if you want to convince those companies that your compute has the same performance, the same quality, but is a lot more affordable, then also make sure that you have the features there that they are already currently using to scale up their applications to billions, or to monitor how their GPU is behaving. So we have enterprise grade features like elastic scaling, load balancing, RBAC systems, logging and monitoring. And that makes it suitable for enterprise clients that are running production workloads, but also for research labs or startups that need more affordable compute. So, and that is really what currently AI, deep in competitors are currently lacking. They are just marketplaces, and cloud computing platform needs to have a marketplace for sure, but it needs to be a component. You cannot try to frame yourself as a cloud computing platform, but then only have a marketplace. It's a very weird thing. You need to have all the features with it that people are already using on other clouds as well. So that's more for the later stage company, I would say, or for the company that is already a little bit established. And then we have the AI Studio on the other hand, and that is more about lowering the barrier to entry AI itself. So it's a low-code environment where clients can fine-tune open source models. They can train them, they can inference them, they can deploy them into production, into production and scale their AI application really fast. So you can basically use this platform with it just a solo founder or just a small team without having to rely on AI expertise, machine learning operations expertise, or infrastructure level expertise. So it's really for the company that is pre-product market fit. For the companies that are still figuring out things, that are low on funding, they can use this AI Studio. GPUs are, of course, always you are always using GPUs when you are fine-tuning an AI model. So the same aspect of our our AI cloud comes into play here as well. We offer a more affordable compute with the same performance and quality as Amazon Web Services, but this AI Studio is just for a different type of user that is more early in their life cycle. So to summarize that, if you are an enterprise R&D team, you will probably lean heavily towards the AI cloud. If you are a startup founder, a solo founder, or a researcher, the AI Studio might be more fitting towards you. Yes.
Seems like you've covered everything everyone could possibly need to build in this space. Really cool. So you hinted earlier at TGE, obviously a token generation event for those who don't know the lingo. When is that happening, first of all?
October 28th this year, 2025.
Okay. So obviously, if you're launching a token, then there's a major role that the token is going to play in everything that you just described. So maybe break down the purpose of the token, how people will be able to use it, how it will continue to drive engagement.
Yeah. So the Planck token, obviously, when you're launching a token, it needs to make sense. So with us, it's not just a common crypto fundraising tool. And there are a lot of companies that actually have very, very effective tokens. And I love to see it. But you also see that a lot of these tokens are just crypto fundraising tools to quickly raise money. But with us, it's like structurally tied to how compute flows through the ecosystem. So at launch, there are several utilities. So I will walk through them first. So we will have staking. Staking is, we have our blockchain itself use the proof of stake consensus mechanism. So users can stake their Planck tokens in our liquid staking pool and receive L Planck token back, which acts as a dynamic yield-bearing token that gives them flexibility while keeping the network obviously capitalized. And then second is co-staking. So with their L Planck tokens that they receive from the liquid staking pool, users can enter pools of enterprise-grade GPU providers. So these pools consist of tier 3 and tier 4 data centers running H100s, H200s, and B200s. That means that without you owning a GPU, you can earn from these infrastructures. So enterprises currently, AI enterprise currently pay top dollar for renting these machines. And we are now democratizing access to these revenues with the co-staking pool. And then the third utility that is live at TGE is payments, and especially our buyback model. So our clients currently mostly pay in fiat, but it's also possible to pay in Planck tokens. It might be a little bit more attractive for Web3 enterprises or clients or projects. I'm not even going into the hassle of trying to convince Web2 clients to pay with a token that they need to buy from an exchange. So they mostly pay in fiat. And we use buybacks to convert that fiat into Planck tokens. So the compute usage directly translates into token demand. Over time, we will launch Planck Zero, which will introduce validator staking. Our blockchain doesn't allow validator staking. It's our own blockchain. It's for our use case. It's not for launching tokens on top of. And Planck Zero will be, of course, a lot different. It allows layer 1 chains to launch on top of. And there comes validator staking into play, but also governance rights we will eventually launch. We're launching our own bridge 2 months after TGE. So that will, of course, the Planck token will play a role in that. We're launching our own decentralized exchange. So the token will play a role in that. So yeah, there will be coming a lot more, token utilities that will become active after TGE. But the core utilities, I would say, are active besides validator staking for Planck Zero. So yeah, it incentivizes providers, gives access to users, and ensures that demand for AI and our cloud computing platform translates directly into demand for Planck tokens.
It's obviously proof of stake. You have, maybe we can go deeper into the staking model. I don't know if you explained everything you want in the staking, but you have co-staking and liquid staking. So there's Planck as well. How does that compare to running your own GPU and standard token staking? Because it seems a bit more complex than the other models I've seen.
Yeah, so how it works is you first use your Planck to stake it into the liquid staking pool. In return, they receive Planck. It's a rebase token that accrues yield dynamically. That yield comes from our liquid staking pool, which is structured to reward on a very long term. And then with the Planck, users can co-stake with enterprise GPU pools. So, by co-staking, your capital essentially back those machines and you can share in the revenue they generate. So, the returns are twofold of this staking mechanism, emissions from liquid staking pools and revenue from real world compute. So, your question was also compare that to running your own GPU. So, unless you are extremely rich, like one of our backers, Brock Pierce, he has millions of dollars of this compute, but most people don't have access to that kind of capital to put that into a nice investments, which is now called GPU staking. The gold for the AI industry. But most people don't have that. So on the other hand, when you try to onboard your own GPU in networks of our competitors, you have probably sitting them at home in your game PC. And, right. You are definitely going to experience higher electricity bills than you thought, cooling costs, hardware depreciation, but also very important, a 3090 that sits in your basement or your gaming PC, it will have a lot of downtime and a lot of bandwidth issues. So theoretically, these machines can earn you up to $20 per hour, something like that. That's what I saw on IO.net. So $20 an hour, but good luck keeping that thing alive, keeping that thing online 24/7 with enterprise runtime. So if you don't have that, then there's a high chance that your GPU is actually not being utilized. So, compared to an H100 or a B200 in one of those co-staking pools I just talked about, they are sitting in tier 4 and tier 3 data centers. These things can earn up to $2 to $4 an hour, and they have near perfect reliability. So these things will run 24/7 on some kind of application of one of our clients, of anybody in the AI space that needs high performance compute. So. Planck staking is definitely more complex, but also more rewarding, more secure, and way less hassle than running your own GPU.
Yeah, that makes perfect sense. You keep mentioning my buddy Brock Pierce. When I spoke to you on Spaces, Brock obviously joined and was able to add some color commentary to our conversation. We all love him, but he's only one of the people you have partnerships with. I think you have Google for startups. I read Microsoft. Is that right?
Yes.
And others. So I guess, all of these partnerships with AI Cloud, how is that helping to drive adoption? How do those partnerships come together? What do those actually mean? We have a long history in crypto of people saying they have partnerships, and it's like they're just using the technology or something, right?
Yes, yes.
What does that look like?
I understand. And I will not go too deep into all the partners, so I will just take the ones that you mentioned. We obviously have Brock. He's not only our investor, but also, we are plugging his compute in very soon into Planck. So we are currently into technical integrations with him and his team. Obviously not with him himself, but with the one in his team that is managing those GPUs. So his GPUs will be plugged into the Planck Network, which is very, very interesting because these things are all very high performance. I think they're classified as tier 2 or tier 3. I think it leans a little bit more to tier 3. So it's wonderful performance, wonderful quality of these GPUs. So very important supply. But then also he's opening his doors across, his vast network of, like you. He knows you. He knows almost anybody that has a little bit.
He knows literally everybody.
yeah. So people need to remember this guy is someone who co-founded Tether, which is still the most used stablecoin by far in the space. So he ran the EOS blockchain race and has decades of experience scaling new protocols. So he's very important on the demand, but also the supply side, like I mentioned. So that's Brock and DNA Fund. One you mentioned. Then you mentioned Google and Microsoft. So Google and Microsoft initially provided us with grants, but later, we also got some technical mentorship from them, and access to developer ecosystems, which was extremely important. We actually found it out a little bit later, but it's still extremely important. But they also give us great credibility. It's not that these companies. You can say in the crypto space whatever you want, but if a company like Microsoft or Google finds out you do that, you're really screwed, because these guys give them their credibility and give them their reputation. So it gives us access to thousands of potential clients, engineering resources, credibility, and cloud credits to accelerate our go to market. So
it's just kind of funny when you see Google for startups and you're like a Google Cloud killer.
It was
you're disrupting them, so they're like funding to disrupt themselves, right?
It was really interesting to see that they actually went through with that. We also went into the NVIDIA Inception program, which makes a lot more sense because NVIDIA, they of course want everybody to use their GPUs over an AMD, or so it made a lot more sense that they gave us credits. With Microsoft and Google, it's just, they were really interested, I guess, in our blockchain. I haven't spoke to any of the persons that let us initially in. So I don't know. I need to maybe speak to him once to see what's going on, but maybe better for not as well. Then we have, QTech, actually, I want to, mention. It's the startup ecosystem of Cambridge. So, the whole name is like Cambridge University Tech Entrepreneurship, something like that. So it's like one of the most, Cambridge itself is one of Europe's most prestigious university, but also they have one of the most prestigious startup ecosystems, of course, because all these PhDs, they know what they're doing in their field. So once these guys think, let's build a company, they get backed by the best. They have their, the best ideas in their industry. So, via that partnership that came on a little bit earlier this year, we had the chance to present ourselves to them. And now we are working with high-profile AI startups in the Cambridge ecosystem. They use Planck AI Cloud for their compute needs. They have been testing out the AI Studio a lot because most of them are pre-product market fit. So they have been able to give us great feedback on the AI Studio for us to take that feedback in and to iterate where needed. And this has also opened up conversations with the Stanford ecosystem, the Oxford ecosystem, the Toronto ecosystem. So the academic and research pipeline that we initially wanted to use for feedback is now becoming a client funnel for us, which is extremely amazing, if you could say so.
So we've covered most of the things that I was looking for in my research, but there was one other that really caught my eye, which was Planck's tunnel, which says there's interoperability with 30 plus ecosystems and will be integrated and prioritized post TGE on October 28th, 2025. So maybe talk about what Planck tunnel is and how that enhances, I guess, the value for these ecosystems and for you, and how that will work once the token's launched.
Yes. Planck Tunnel is just our bridge layer. So it's built in collaboration with VIA Labs. What it does, it just connects PlanckOne and later Planck 0. But also, other layer ones onto Planck 0, to around 30 plus ecosystems. So they will just be able to move their tokens to other ecosystems, tap into the Binance user base, tap into the Ethereum liquidity. It has a stable coin rails integrated because Via Labs has, we are currently building it together with Via Labs, and they have a partnership with Circle. So USDC can flow natively. But most importantly, this is the token tunnel, but later on we're launching the compute tunnel, and the compute tunnel, once Planck 0 is live, GPU interoperability will itself will be shareable on chain. So the compute tunnel is really revolutionary. When Planck 0 launches, the compute tunnel will also launch through libraries, and these layer ones can just share their compute, or GPU providers can make sure that their compute is instantly utilized by any of the ecosystems inside Planck 0 that need or that have the demand and need the supply. So if let's say project A convinces a GPU provider that their ecosystem is the best and that they will utilize a lot of their compute, and they work weeks on the technical integration, and once it's integrated, it works for one to 2 months. They have demand, but all of a sudden that demand falls away. Then the GPU provider doesn't have to worry about moving to another ecosystem because it will be utilized immediately by another chain that needs it. So, yeah, hopefully we make sure then that the whole story of Deepin is not that, yeah, everybody has supply, but nobody has demand, but that supply is just a stable thing inside ecosystems, that it can be constantly utilized by projects that actually need it. So that's the compute tunnel that we'll be launching together with Planck 0. And then the token tunnel just allows PlanckOne in the beginning to have interoperability of the Planck token to ecosystems like Ethereum, BNB Chain, Polkadot, Near Protocol, and many more. And later on, companies that are launching their token and are inside the Planck 0 ecosystem, they will have this token interoperability as well. So together with the compute tunnel, they will have the token tunnel without having to speak to Chainlink or any of the other major bridge providers.
Really impressive, man. Is there anything we missed?
I don't think so. You hit the right question. So, I mean, yeah,
I actually did my research for this one. You know, usually I just show up and wing it, but this is really, after our conversation on Spaces and after really trying to understand it, is well above my like pay grade as far as deeply understanding GPUs and AI and cloud. So I tried to get ahead of it.
Thank you for taking the time to dive deeper into us, and thank you for the space a couple of weeks ago. Thank you for this video, and we'll be speaking to you again in the near future. I'm very sure before TG.